Money is the lifeblood of every economy, shaping the way societies function and grow. But have you ever wondered how money came to be what it is today? It wasn't always coins, notes, or digital numbers on a screen. The story of money is a fascinating journey that spans centuries, marked by human creativity and the need for better ways to trade. In this video, we'll travel through time, starting from the earliest days of human exchange, moving through the major stages that transformed how we buy, sell, and save. Let's begin our exploration of the evolution of money, a journey through time that reveals how simple exchanges became the complex financial systems we know today. Long before coins and notes, people relied on the barter system to meet their needs. In this system, goods and services were exchanged directly. Imagine a farmer trading rice for a piece of cloth or a potter swapping pots for grain. While this method worked in small communities, it had significant limitations. There was no standard measure of value, so agreeing on fair trades was difficult. Both parties needed to want what the other offered, a challenge known as the double coincidence of want. Additionally, storing and transporting wealth was cumbersome, as goods could spoil or be hard to move. These challenges set the stage for the next evolution in money. Overcome the problems of barter, societies began using commodity money, items that had value in themselves and were widely accepted in trade. Examples include salt, cattle, shells, and even spices. These commodities were chosen because they were durable, easily recognizable, and had intrinsic value. Commodity money made trade more efficient as people could agree on the worth of items more easily. However, it still had drawbacks, such as difficulty in dividing or transporting large quantities. Nevertheless, commodity money marked a significant step forward in the evolution of money, paving the way for more advanced forms. As trade expanded, societies sought more practical forms of money. Metal money, especially coins made from gold, silver, and copper, became popular. Metals were durable, easy to carry, and could be divided into smaller units. Coins were stamped with marks to certify their weight and value, making transactions more trustworthy. This innovation allowed for larger and more complex economies, as people could now save and transport wealth more easily. Metal money also introduced the concept of standardized currency, which would become essential in future financial systems. Invention of coinage was a turning point in monetary history. Ancient civilizations like Lydia and Rome began producing coins with official stamps, guaranteeing their weight and purity. This made coins widely accepted and trusted, encouraging trade across regions. Coins could be easily counted and carried, making them ideal for both small and large transactions. The spread of coinage laid the foundation for more organized economies and the development of markets, banks, and other financial institutions. Societies grew and trade networks expanded. Carrying large amounts of metal coins became impractical. The Chinese were the first to introduce paper money around the 7th century. These notes represented a promise to pay the bearer a certain amount of metal coins on demand. Paper money was lighter, easier to transport, and could be produced in various denominations. Its adoption spread across Asia and eventually to Europe, revolutionizing commerce and making large-scale trade more feasible. The rise of paper money came the need for institutions to manage and safeguard wealth. Banks emerged as trusted intermediaries, issuing notes, accepting deposits, and facilitating loans. Early banks in Italy and England played a crucial role in supporting trade and economic growth. Banking systems introduced new concepts like checks, promissory notes, and credit, further enhancing the flexibility and security of money. This era marked the beginning of modern financial system. In the 19th century, many countries adopted the gold standard, linking their currencies to a fixed amount of gold. This system provided stability and confidence in international trade, as paper money could be exchanged for gold at any time. The gold standard limited governments' ability to print money, helping to control inflation. However, it also restricted economic flexibility, especially during times of crisis. The gold standard dominated global finance until the early 20th century, when it was gradually abandoned. After the decline of the gold standard, most countries shifted to fiat money, currency that has value because governments declare it legal tender. Unlike commodity or gold-backed money, fiat money is not backed by physical assets. Its value depends on public trust and government regulation. Fiat money allows central banks to manage the economy by controlling the money supply, interest rates, and inflation. Today, almost all modern currencies are fiat money, forming the backbone of global finance. Next leap in the evolution of money came with the introduction of plastic money, credit and debit cards. These cards made transactions faster, safer, and more convenient, reducing the need to carry cash. Plastic money also enabled the growth of electronic banking and online shopping, transforming the way people manage and spend their money. With secure payment systems and global acceptance, plastic cards became an essential part of modern life. Electronic banking revolutionized financial services by allowing people to manage their accounts, transfer funds, and pay bills from anywhere. ATMs, online banking, and mobile apps made banking accessible 24/7. This digital transformation increased convenience, reduced transaction costs, and improved security. Electronic banking also paved the way for new financial products and services, making money management more efficient than ever before. The widespread use of smartphones, mobile payments have become increasingly popular. Apps like Apple Pay, Google Pay, and various digital wallets allow users to pay for goods and services instantly, both online and in stores. Mobile payments offer speed, convenience, and enhanced security features like biometric authentication. This innovation has made cashless transactions more accessible and is rapidly changing consumer behavior worldwide. Latest stage in the evolution of money is digital currency. Unlike traditional money, digital currencies exist only in electronic form. Cryptocurrencies like Bitcoin and Ethereum are decentralized, meaning they are not controlled by any government or central bank. Digital currencies offer fast, borderless transactions and are built on blockchain technology, which ensures transparency and security. While still evolving, digital currencies are reshaping the global financial landscape. Blockchain is the technology behind most digital currencies. It is a decentralized digital ledger that records transactions securely and transparently. Each transaction is verified by a network of computers, making it nearly impossible to alter or counterfeit. Blockchain technology is not limited to money. It has applications in supply chain management, voting systems, and more. Its introduction marks a new era of trust and innovation in finance. Central banks around the world are exploring their own digital currencies known as CBDCs. Unlike cryptocurrencies, CBDCs are issued and regulated by governments. They aim to combine the benefits of digital money such as speed and convenience with the stability and oversight of traditional currencies. CBDCs could make payments more efficient, reduce costs, and improve financial inclusion, especially in developing countries. Today, money serves multiple roles in the economy. It acts as a medium of exchange, a unit of account, a store of value, and a standard of deferred payment. These functions make it possible for economies to grow, businesses to operate, and individuals to plan for the future. The evolution of money has made financial systems more efficient, flexible, and accessible to people around the world. Despite its many advantages, modern money faces several challenges. Issues like inflation, cybercrime, and financial exclusion affect individuals and economies. Digital currencies raise concerns about security and regulation, while cashless societies may leave some people behind. Policymakers and financial institutions must balance innovation with stability to ensure money continues to serve everyone effectively. The future of money is likely to be shaped by ongoing technological advancements and changing consumer preferences. We may see further integration of digital currencies, increased use of artificial intelligence in finance, and new payment methods that we can't yet imagine. As money continues to evolve, it will remain a central part of human society, adapting to meet the needs of each new generation. Let's quickly recap the major stages in the evolution of money. We began with the barter system, moved to commodity money, then to metal coins and paper notes. The rise of banking and the gold standard followed, leading to fiat money, plastic cards, electronic banking, and finally digital currencies. Each stage addressed the limitations of the previous one, making money more efficient, secure, and accessible. Evolution of money is a testament to human ingenuity and adaptability. From simple exchanges to complex digital systems, each stage has played a vital role in shaping economies and societies. Understanding these stages helps us appreciate the importance of money and prepares us for future changes in the financial world. As technology advances, staying informed about money's evolution is more important than ever. Money's journey is far from over. As we look to the future, new forms of money and payment systems will continue to emerge, driven by technology and global needs. Whether it's digital currencies, AI-driven finance, or innovations we can't yet predict, the story of money will keep evolving. By understanding its past, we can better navigate its future and make informed decisions in our personal and professional lives.